All right.
Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Wednesday afternoon, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq 100 weekly performance. We'll also take a look at some of the unemployment data. And Ryan, the month of September is certainly living up to its reputation of being one of the more volatile months of the year.
Yeah, it has, and it's certainly like that notion of everybody coming back for the big push into year end. To close up August, QQQM and QQQ were down 2.66%, underperforming S&P 500 down 1.91%, and S&P 500 value down 1.56%. But short week with the Labor Day holiday. The thought is a lot of participants don't want to be going into the long weekend being long securities, and we've seen this on light volume. On average for 2022, QQQ trades 72.348 million shares a day. For August, we saw that number dip down to below 47 million. July was under 59 million, and June was under 65 million. So you compare all that to May, which averaged over nearly 93 million shares a day, with 8 separate trading sessions over 100 million. Right, you sort of see that summer lull, but I would anticipate those volume figures to start to pick up here over the next few weeks.
And what do you think about the unemployment data moving up 0.2% here?
Yeah, so I mean, the unemployment picture continues its strength. I mean, Friday saw that release of August unemployment rate, and to your point, it surprisingly ticked up to 3.7%. But as you can see from the chart, we are still at historically low levels for unemployment. Over the past 40 years, there's only really been 3 periods where the reading has been under 4%, and we are comfortably below that level. And I think this sort of gets back to the point you were making last week with the JOLTS data and job openings. Is look, the employment data remains robust. Beyond unemployment and JOLTS, we saw initial claims for the weekend ended August 27th come in at 232,000. So that's ticking down, and the week prior was revised lower. Non-farm payrolls for August came in stronger than expected at 315,000, a little weaker than the July figures of over 500. We saw average hourly earnings growth at 5.2%, slightly weaker than an estimate, but all in all, the data this week tells the story of a still very strong labor market, and it seems likely that another 75 basis point hike is certainly in the cards for September 21st. Fed funds futures are pricing in 69 basis points as of today, so there are more folks expecting 75 basis points on a hike than they are 50. But next week's going to be the big release with CPI on the 13th. The Fed officials are sort of heading into their quiet period before the September 20th and 21st meetings, but comments from a number of officials this week have kind of reiterated the narrative of regaining price stability and the potential for higher rates for longer.
And finally, let's wrap up with sector performance here.
Yeah, another week of every sector in negative territory for the S&P 500, all but one sector in negative territory for QQQ. That was utilities, being the only one to finish in positive territory. Interestingly, QQQ outperformed the SPY in 5 out of the 7 sectors that it has exposure, but underperformance in its biggest overweight, of course, technology, and underperformance in healthcare were enough of detractors on a relative basis that QQQ still underperformed SPY for the week.
All right. Appreciate the insight as always, Ryan. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.